in the case of the gold-silver ratio, that the market can stay irrational longer than we can all stay solvent. And that's really very true. Today is a good example. I mean, the market has been unbelievably volatile today. And the only other thing I'd like to say, when we talk about gold at all-time highs yesterday at above 3150, and here we are today with all this volatility at 3110 or so, yet there's eerie quiet in the market. There's no headlines. There's no retail euphoria. Quite to the contrary. This is not a bubble at all.
In today's recap, silver slid to its lowest point in over 8 weeks, dipping to $31 an ounce on Friday, as recession worries and concerns over industrial demand took center stage. The drop follows a wave of new tariffs announced by U.S. President Donald Trump, which rattled markets and heightened fears of a global economic slowdown. While silver often trades in tandem with gold, its heavy reliance on industrial applications like electronics and solar panels makes it more sensitive to downturns in manufacturing and broader economic activity. Industrial demand, which accounts for more than half of global silver usage, estimated at around 700.2 million troy ounces in 2024, according to the Silver Institute, has kept silver under pressure despite gold's rally. Unlike gold, silver has retail say tile 2024 hands high cents. Since Trump's tariff announcements on Wednesday, silver has shed nearly 9%. Analysts like Akash Doshi, global head of gold strategy at State Street Global Advisors, suggest that silver is likely to continue lagging gold until there is more clarity on trade relations and overall economic direction, especially given silver's close ties to industrial production and global payment.
Down $80 at one point, and about an hour ago it was actually up for the day, and now it's down about $27. So, when you talk about this whipsawing, yet only giving back less than 1% on gold isn't the case right now with silver, which is down $2 to right at $32 or just above. Certainly they and I guess if I had to summarize it, to me, it's almost like there's a clear effort to flush the managed money out of their long silver positions on COMEX, and maybe it's to allow these commercial banks to cover at lower prices. I don't know, but certainly today was one heck of a volatile day, not just for precious metals. I mean, look at the markets themselves. The Russell 2000 index officially has entered bear market territory for the first time since 2022, and NASDAQ down almost 6%, and the markets are getting clubbed. And then you have Secretary Besant saying, that the collapse of the market is not a MAGA problem, it's the MAG 7 problem. And we talked about last week on your show that the MAG 7, when you talk about the hedge funds having their lowest allocation to the MAG 7 in over 2 years, things are certainly starting to get very interesting, as they say, which of course is the Chinese curse. Where you live in interesting times. These are not for the faint of heart, for sure. Well, let's not forget about the dollar, which has lost 35% of its purchasing power against gold in less than a year. And so it's not just the volatility we see in silver, but the volatility in the dollar too. And that's the thing people need to remember, is that we're valuing everything against dollars, but gold's rise of 35% just since the beginning of the year would signal that the dollar has lost 35% of its value against gold in the last year. And now you have the Fed pricing in a 70% chance of rate cuts in June, and the yield on the 10-year falling. Again, you're looking at the potential of dollar weakness going even further and further and further. So, I mean, you make a very valid point, but I would also add to that this fiat system, as you mentioned, is beginning to show cracks, and it's this global confidence that's underpinning the dollar's dominance seems to be wavering a bit, especially with what Trump is doing with the tariffs and what the markets are saying. And when you see the Russell 2000, which is the broadest measure basically of the economy, all the small caps, the businesses getting hammered I think it's time to buckle up a little bit. I'm not making a statement on where I think gold and silver are going, but I'm just simply saying that the markets are telling you right here and right now that they're concerned about what's going to happen the rest of the year.
Trump's sweeping tariffs included a 10% baseline on all imports, with much steeper rates aimed at major economies: 54% for China, 20% for the EU, 24% for Japan, and 27% for India. Even Argentina wasn't spared, facing a 10% levy under the MLA clause. In response, China announced a 34% tariff on all U.S. goods starting April 10th. Markets reacted swiftly, with equities and commodities taking a hit, while investors moved into traditional safe havens, like government bonds. Despite the market-wide sell-offs, some analysts believe silver and other precious metals could regain traction if recession concerns deepen and expectations grow for potential rate cuts by the Federal Reserve. Gold, meanwhile, has continued its surge, driven by safe haven demand, robust central bank buying, and a rise in ETF inflows. On Thursday, spot gold prices touched a record high of $3,167.57. However, the gold-silver ratio, a metric indicating how many ounces of silver are needed to buy 1 ounce of gold, has widened to 100, the highest level since June 2020. According to Ricardo Evangelista of Active Trades, silver's industrial vulnerabilities will likely cap the upside even as investors seek safe assets. What's your take on Andy Schectman's perspective? Are you seeing this drop in silver as a buying opportunity, or do you think there's still room to fall? Share your price predictions and thoughts on the current gold and silver trends in the comments. And if you're looking for more insights like these, check out the video right here. You won't want to miss it. See you on the other side.